Given the moves we've seen not only in the broader market, but also in the internet space right now, and the fact that so many investors are trying to game out what the impact here of COVID-19 could actually be on the sector, how are you gauging, how are you assessing risks versus rewards within your coverage universe?
Okay, we had pretty significant data points this week. We had the CEO or the CFOs of companies like Uber, Lyft, and Google Alphabet all present at an investor conference this week. And I think what we heard from all of them was not yet seeing a material impact. Lyft actually said they were seeing a small positive impact because people were leaving public transportation and switching over to their, the private ride-sharing service. Uber said they were seeing some impact at airports, but all in, it wasn't material enough, and they may actually have a hedge in the Eats business. And Google, given a chance, said that they had not yet seen a material impact. So we've seen those three stocks, Uber, Google, and if I throw in Facebook too, are off up right in line with the market around 10%. We think valuations are interesting. No idea how long we're going to see a potential impact on these businesses. But we like the assets, and so on this kind of pullback, we're buyers. And in that order, we like Uber first, Google second, Facebook third.
Yeah, Mark Shmulik, a lot of uncertainty still out there, given the fact that this is such a fluid situation in general. How are you assessing the stocks that you cover right now? And especially when it comes to something like ride sharing, could we actually see names like Uber and Lyft be somewhat immune, or is the worst yet to come?
Yeah, it's a good question, and in rideshare in particular, we're looking at it almost from like a stoplight perspective of yellow, amber, red. Yellow, that's where you see corporations pull out of events, cut back on some of their international travel, airport traffic down. We know that makes up about 15% of gross bookings for someone like Uber. But then we get into this amber zone where folks are starting to make the decision, should I take public transport or should I do private? Should I go to a restaurant or should I order in? And that's where you could actually see a long-term lift for some of these names where they're actually bringing new customers on board. And so I think we're kind of in that zone right now, and what we want to avoid is obviously that red light scenario where everyone pulls back entirely. And so that's what we're monitoring closely of just how far down this curve are we going to go.
Hey, Mark, I'm sure you're aware on Facebook, some of your colleagues on the sell side cutting numbers. They point out, Needham says, 6 of the 10 largest advertising countries are COVID-19 hotspots. Advertising projections are starting to decline. It's the fastest way to cut costs for big clients. How much of a liability is that for Facebook? For Mark?
Mark Mahaney.
Sorry, there's two Marks here. All right, here we go.
My bad.
One of the reasons that we like both Facebook and Google is we thought we'd have, up until COVID, we thought we would have an accelerating global advertising market because of large-scale events like the Olympics and obviously the U.S. elections. If the Olympics are canceled, then that's clearly off the table. So far, I haven't seen the evidence yet that those ad budgets have been materially cut back. But yeah, these are names that are cyclical. They were during the last major downturn, and they're if we had a real advertising recession because of this, I would expect Google to go negative. Now, I also think that fundamentals for a lot of other sectors would be hurt a lot worse if that were to actually happen. We haven't seen the data points yet. I get the exposure, but we haven't seen it yet. But both of these are macro, the size of the companies is such that they are obviously macro dependent.